Hi friends, I hope you are doing good. See, first I will introduce myself that I am Rajat Makkar. I'm a chartered accountant and I have got experience of 15 years in service. And for the past 6 years, I'm managing portfolios also, that is stock portfolios. And I have one channel on the based on IPO itself, and I provide few like educational things about the shares, the fundamental research I do. And on that, I just want to tell you that why I have opened this a new channel. Actually, in this channel, I'm going to do the coaching, and I'm going to do the coaching for all the practical subjects of 11th class, 12th class, and CA entrance. So in the initial stage, I have taken the 11th class. That is 10 plus 1 also. So here I am starting with the accounting, and whatever I will do, I'll just provide you the examples, and that is going to be very simplified. Okay, and you will definitely observe lot of things, and it is going to be very beneficial not only for the students but also those who wants to learn accounting. Okay, so to start with, what is accounting? Let's see what is the definition of accounting. If you see by American Institute of CPAs, this is the definition of accounting. But I am going to tell you in a very with the help of an example. I'll tell you it in a very simple manner. Okay, then also, like, first we should know what is accounting. This is an art of recording. Okay, we are recording something, we are classifying something, and then we are summarizing in a significant manner and in terms of money. So that is, this has to be money only, and transactions and events which are in part at least of financial character. So it has to have some economic benefit, some financial nature, and after that, interpreting the results thereof. So after, at the end of it, we have to see the results. So like most of like you will think, what is this definition, in the initial stage and all that. So I will provide you this with an example, and it will definitely add some meaning, and then you can correlate that. Once you understand the example, you correlate this definition with that, and then it will provide you a meaningful meaning of this. Otherwise it's a very big heavy definition if you see over here. Okay, so let's start with an example, and then we'll understand this, what is accounting, right friends? So, like, to understand this to understand this definition, I have given the example, like if you are going for a tuition or coaching. Okay, and see, that coaching center is 5 kilometer. You have to travel to and fro, you have to do. And for that coaching center, of course, you will require some stationery, you will require some books, you will require some register, you will require some pen also. Okay, and you go for 20 days. Okay, and for that, you want to know how much I have spent for that coaching. Okay, and then you want to compare with an online class. Okay, and then you want to arrive which is better in terms of cost wise. This is just an example. Okay, so you go to the coaching center, okay, for 20 days, which is 5 kilometer far, and you provide stationery. So okay, so first we'll see offline. Say that for that tuition you give monthly 5,000 rupees. So you are giving 5,000 rupees to the person who is giving you coaching. Okay, you travel. Okay, 20 days you have traveled, and every day for the travel you have to spend 100 rupees. Fine, so that becomes 20 into 100, like how much you spend on the travel is 100 rupees per day, and 20 days you go, so you have spent 2,000 rupees on the travel, right? Then you buy stationery, like you buy some reference books and all that, say that it's for 400 rupees, and then you buy some registers and all that, say that is for 200 rupees, and some 100 rupees for highlighters, pen and all that, what miscellaneous, that you pay 700 rupees. Okay, so if you see in total, you have paid 5,000, 2,000 and 7,700. So totally for the offline you have paid 7,700 rupees. Okay, and here if you see the online coaching, say that it's an example, it's coming 1,000 rupees per month. Okay, so when you do a comparison that what was the best for you for the in the terms of saving or in the terms of cost wise, for online you are paying 1,000, and for coaching center you are paying 7,700 rupees. So of course by cost wise online is better. So this is now just an example, and now I'll take you to the definition and you will understand. See, now we'll read that. This is AICP had defined accounting as the art of recording. So you have to record everything. You understand that you have to record each and every transaction which is of a financial nature. This is it is mentioned there also, it is of financial nature. First you are recording. Okay, so you have to record here, like you are paying for tuition, you are going for travel, and you are paying for stationery. So you have recorded one thing. Then you are classifying. So you have classified that into three terms. One is tuition, one is travel, one is stationery. Here you have classified, you have given each head that how much you are paying for tuition, how much you are paying for travel, and how much you are paying for stationery. Okay, then you are summarizing, like here for the tuition total you have paid for monthly 5,000, travel 20 days you gone, per day is 100, this is 2,000 rupees you have paid. Stationery you have paid 700. Okay, so if you see the total of all, you see, if you see the total, you can say that for stationery per month it is 700, travel per month 2,000, and tuition per month 5,000. Okay, and total then it's come to 7,700. So you have given a summary that this is what is my cost for going to tuition. So you are not telling like somebody like stationery 400 I have spent, 200 I spent, that is in detail, but you have summarized is the total of all that, then you are given 700 rupees. Okay, now this becomes 7,700. Okay, summarizing in a significant manner and in terms of money. So we have converted everything, whether tuition, travel, stationery, into money, and then we have recorded also, we have classified also, we have given the summary also, transactions and event which are in part of financial character. So whatever the financial things were involved, we have mentioned everything, and interpreting the results thereof. Now we are interpreting the results also. Okay, that, so now our task from the beginning for this exercise was, what is my total cost for offline coaching? Okay, so it comes to 7,700. So we have given we have interpreted the results also, and if one step further we have compared this with an online coaching which is of 1,000 rupees, we can definitely say that cost wise online coaching is far more cheaper than the coaching, offline coaching. So this is the way, like whatever is there, very small thing, you have to put everything into some heads. Okay, you have to record, first of all in accounting you have to record everything, then you have to classify like all the expenditure, everything you have to put into some the heading, that like tuition, travel, stationery, whatever is that. Against that you please add all the cost. Okay, then total of all that, then it will give you the meaningful result, because then you are summarizing all the, at the end you are making a decision also. So this is just an example. Now you can think whatever you have done accounting in your life. I can just tell you, like, you guys would go to the canteen. Okay, you guys go to the cafeteria in school. Okay, three of like two three friends are there. So one day you will spend. You will say that was today I have spent. So this is the some part. This is what is like you have to get. This is what other two-person has to give you. Suppose there are three friends are there, so you will say, boss, you have to, suppose you have spent 300, so you will say that you two have to pay me 100. Next day the other person has spent, suppose you can say 600 and all that, so he will say that you guys have to pay me 200 and 200. So if you just take by name, like everybody, like how much you have to pay to a person or how much you have to receive a person, this is what you also actually you also do. So accounting is just a bookkeeping, which you guys are doing it now also. Okay, but here this is like this will be some conventional terms will be there. Like you will be seeing doing it in much more detailed way. But please understand everything with a very very normal examples. Okay. Now this it is going to be economic events. Okay, so this event, as I told you, this has to be measured in monetary terms. Like if you have spent on this it will, in my last example, like you have spent on tuition 5,000, so you will say that okay, it should be able, you should be able to convert that into 5,000. Suppose you have given something apart from 5,000 rupees, you have given something to your this thing wherever you go to coaching center. So and like some kind gift and all that you have given, that will not be considered unless and until you can put into monetary terms. Okay, so it has to be in monetary terms. And here there are two types of events. Now suppose I'm going to use an example like where I'll be making, say that I'll be making the chairs. Okay, and I'm selling the chairs. Okay, I'll be making the chairs. I'll buy the wood and all that, and I'll be putting into the machines and all that. Then I have made the chair, and then I'll sell it. Okay, this is my organization. Okay, this will be my organization, because this my organization, what it is doing is it's doing this business. Okay, now when I am dealing, suppose this in this business, when I'm making the chair, when I'm dealing with an outsider, okay, then that will be called as external events. And when I am dealing with the internal in my own this thing in my own company, internally if I am dealing, then that will be called as internal events. Okay, now in external event, like whatever, suppose I am selling the chairs to the customers, so that is, customers are my outsiders. Same way, if I am rendering any services to the customers, okay, so again, if I'm not like now selling the chairs, but I am giving some services. So like you go to the barber shop or you go to the salon, and they cut your hairs and all that, so they will be giving the service, right? So what they are doing, giving you the service. For them you are the customers, so for them it is the external event. Okay, now suppose in my chair example, if I am purchasing the raw material, like I am purchasing the wood, okay, to construct my chair, so that I'm taking it from the supplier, like a person who supplies me the goods. Okay, who supplies me the goods, raw material and all that, they will be treated as my suppliers. Okay, then at a place where I have doing this business, I have to pay the rent also, like how you pay sometimes how you pay rent for your home, same way you have to pay the rent also for the factory place. Then you are paying the rent to the landlord, so that is also an external event. So always see that whatever the transactions journals are there, if it is with, is it internal or is it an external. Okay, now see, as I told you, internal will be like, if I'm having say that I am having a auto factory shop, like just for example, we'll take Mahindra and Mahindra car. Thar will take it. Okay. Now a car, what will happen if you see the production? What will happen? First they'll make the tin and all that everything. Then they will just paint it. Then they'll put the engines and all that. Then tires. Then accessories, music system and all that. Then it will be ready, rolled out. Okay. So what it will be doing, like this there will be multiple shops which they'll call it in the same factory. One body shop will be there where they'll just make that outside tin and all that, the normal tin, they'll make it into the car design. Then after they'll just paint it, they'll dip it into that paint. Then they'll provide the engine, tires and accessories. So for each of this, there will be these are called shops. Okay, but the end result will be Thor. Okay, but these are all, if you see that these are all internal events here. Like once if work is done at the body shop, then we'll be doing paint again, we'll do it in our own factory. Again we'll put the engine in our own factory. Again we'll put the tire in our own factory. Again we'll put the accessories in our own factory, and the end result will be in Thor. So we are doing it all the work. So but these are all called internal event. Okay. Now accounting, we have to first of all know what we need to record. Okay, we need to record, as I'm telling you, that it has to be financial and it should be relating to the organization. If it is of non-financial nature and if it is of unrelated to the organization, we should not record it. Okay, like if I'm just appointing any employees, okay, or if I'm changing any company policies are there. So if we are changing a company policies, that is not to be treated as that we will not be recording in the financial accounting. But if we are selling the goods, whether we are selling goods on cash or credit, okay, I'll just tell you, like I am the person who's making the chair. I'll just go to my chair example most of the time. Okay, now I have got some 100 chairs. Okay, 50 chairs I have sold it for cash. Okay, like I have sold it, I will get immediately the cash. Okay, for 50 I have sold it, that the customers will say no, we'll pay after 1 month, some will say after 2 months, some will say after 3 months. Okay, so they have not paid me immediately. So that is what is known as credit, that I have sold my some goods, in my cases chairs, where like I have not got the cash, but in the future I'll be getting the cash. Okay, so that is called credit. Okay, so this transaction, of course, credit one, we have to record it. Yeah. Then measurement, it should be we have to measure it in a monetary terms. Okay, it has to be measurable, and we cannot measure, like we are appointing somebody or we're just changing employees and all that we cannot measure. So that we cannot record. Then we have to do the recording once we have identified a transaction, that yes, it is a financial nature and it relates to organization and it is it is measurable. Okay, then we have to do the recording. Okay, how we have to do the recording? We have to record in a chronological order. What is chronological order? Is 1, 2, 3, 4 dates. Like you'll put like today we have 21st of August, 22nd, 23rd, 24th, 25, 26, like that. Okay, and this recording will be as per we have got guidelines from the Institute of Chartered Accountants of India. So that is practice means as per that, or whatever the law which center government will provide. Okay, so we have to do the recording as per that. Okay, and this has to be chronological. I have already told you, right? Then we have to communicate. Once we have done the recording, we have to communicate this with the internal management. Okay, our accounting information, and with the internal and external users. Now see, who will be our internal users? Internal users will be like our CEOs, VP. CEO is Chief Executive Officer. CFO is Chief Financial Officer, managers, so that we have to tell them that this is your accounting information. So based on that, they can take the decision. Okay, they are our internal users, and then we have the external users as well. External users are like investors, those who will invest in our business, they are called investors. Then banks, financial institutions, they will give the loan to us, so they also want to see whether we are worth or not, because then only they'll give the loan. Because if somebody is giving you the loan, of course you'll think that means you'll able to repay their principal or interest or not, right? So they will see our credit worthiness from that financials only. Okay, then we'll just give it to the government also. Okay, so the government is going to see whether we are paying the tax properly, whether we are, we are compiling with the laws and all that. Okay, so and these reports could be the reports can be like, it will be quarterly based, monthly, or if internal and all that is there, internal teams are there, they can, it could be in daily or weekly. It all depends as per the needs of the users. Okay, so as I told you, this here this interested users are like CEOs, as I told you, CFO, VP, managers, they are the internal who are interested in planning and all that. So they will be interested in that planning and taking the decisions. External, as I told you, investors, creditors, banks, they'll be interested to know about like whether we'll be able to repay their this thing, loans with principal and interest. And authorities are, say it is like, we have a, if shares are listed for a company, then it is SEBI is the authority. Then we have tax, then ROC, register of companies are there. Provident fund organization, that whether we are deducting correct provident fund for our employees and we are depositing it or not. So they will see that. Trade associations and all that, so they will take the decisions as per that. So they will use the accounting information, right? So this I have told you, like owner, if I am the owner, like if I am just doing the manufacturing of chair and all that, I'm selling it, I'll see like what is the return on my investment. Investment is like how much money I have put. Suppose I have put 1 lakh rupees on my business. Suppose I'm just giving an example of chair, this I'm making chairs and all that, and I have put 1 lakh rupees. Suppose if I'm getting a return of 5,000, just say that my net profit is after every cost and all that, I'm getting 5,000 rupees. So I will say that 5,000 is the return, so which is on investment is 5 lakh. So like I am getting a return of 5%, right? So how it will help me, like I can see, like I'm getting one return is 5% on 1 lakh. Okay, so in FD I can get 7 or 8%, say. So I will think that that is much more better, that if I just give it to put my money into FD and I'll get the more return. So I will be interested to know the return on investments. Now for directors and managers, they can compare in the same industry. Okay, and they will also see whether we'll able to repay the debt and will be solvent or not. Okay, so solvent is like, we will be, the business will be keep running and business will have the cash, or business or not. So they will come to know from that place. Okay, then creditors like banks and all that, as I told you, they are interested in the principal and the interest, that whether the company can pay them the interest and principal or not. Then investors, like person who will put into my business, like say for the chair, the business is there, they will also see what is the return they are getting. Okay, if they're not getting good return, they will withdraw. That also could happen. Then government authorities and all that, they will just see that whether taxes are getting paid or not, and they will see we are compiling all the rules and regulation. So they'll protect all the stakeholder, whether it's employee, investors, and environment, everything they will see. Okay, so see, this accounting information is very useful to make the economic decisions for internal and external, as we have seen. And then it is very important that from here we will understand what is the cash flow also. of a company. See what is cash flow. I'll just give you example. And I'm making I'm making chairs. Okay, every chair is costing me say 100 rupees. Okay, and I'm able to sell the chair for 125. Okay, now if I made 100 chairs, okay, and 100, all the 100 shares I have sold it for credit, means the customer has not paid me. Customer has told me I'll pay after 6 months and all that. What will happen? I have sold my all the shares, which is on 125. I have sold my all the shares, chairs for 125 rupees, okay, to a customer who has not paid me, but he told me that he'll pay. Okay, what will happen? That I will not get any cash. But so in my cash flow, what will happen? It will show that I have not received anything. However, whatever cash was there to make those chairs, I have spent that. Okay, so my cash flow will be negative. Okay, because there is no inflow. Inflow means I didn't receive any cash, but I have paid the cash to manufacture my chairs. So this will be a negative. So that is what is cash flow. We'll do everything in detail, like as soon as and when we'll go into deep into all this. Okay, I'm just telling you what is this cash flow. And this accounting information we'll come to know. We have a separate columns in company where we will be giving all the information about the renewals also. Means how much we are spent, we'll be using the power, how much the power is coming from renewable sources, what is the pollution like our factory or our companies producing, and how we are dealing with that, how we are just throwing that waste. And if we are doing any corporate CSR activity like corporate social responsibility, like if we are helping poor, education and all that, so that information also we come to know from this accounting information. Okay, so now this is the basics and all that. So like there are some fill in the blanks are there. Now information in financial report is based on economic transactions. As I told you, all the transactions whatever we'll just do, it has to be monetary. Okay, it has to be economic. Okay, so then only this information will come in the financial report, will only come for the economic only. Non-economic non-monetary one we will not consider. Okay, internal users. Second one, internal users. Who are the internal users? I told you about the external users and internal users. Internal will be management, employees, manager, CEO, CFO, all that. Whoever is working with the company and all that, they are internal users. So internal users are the management and employees of the business entity. A dash would most likely use an entity's financial report to determine whether or not the business entity is eligible for a loan. So who will see for the loan? Banks. Banks will see. As I told you, they will see whether they will able to repay our principal and interest or not. Then only they'll provide the loan. Okay, even creditors will also see. Then only will supply the good. So bank or creditors. Okay, so like in this case it's creditors are there, so they will be checking this information and using the financial report. Dash users are grouped outside the business entity who uses the information to make the decisions about the business entity. Okay, so if we have internal or external users. Okay, as I told you, whoever is there in business organization, whoever is employee, who is manager, whoever is working with the company, in the company, that is all the internal organization. And whoever is working with the company, but they are not the employee or they are not the managers of that company, they are known as externals. External could be your like creditors, banks, investors, government. Okay, and here the process of accounting starts with identification and ends with communication. Like once we have got the accounting information, we will identify first the transaction and then we'll communicate the information. Okay, that is its ending also. Now this accounting measures the business transaction in terms of monetary units. Okay, all the accounting, whatever the transactions will do, the business transaction, if we have it, all depends on the it, everything will be doing in monetary units only. Like it could be rupees, USD, or whatever. Identify and measured economic event should be recorded in, as I told you, chronological order. So like day 1, day 2, day 3, day 4, day 5, day 6, you have to record all that. Fine. Now we have multiple segments. Further segments, like how we have divided the accounting, this accounting, like one is financial accounting, where we're writing all the transactions in financials to ascertain whether we have got profit or loss. Okay, so that is, we are recording for financial accounting, will be getting that. Now how will be getting this profit and losses? Like see, I am just manufacturing chairs and all that. Okay, chair will cost me 100 rupees. Okay, and I am selling the chair for 125 rupees. Now my selling price is more, say 125, and my cost price is 100. So here, like I am getting a profit of 25 rupees. Why? Because I am able to sell my chair at more than my cost price. Okay, so at the end, if I just do completely, if I just prepare the financial accounting, I'll just do all that. I'll just record all that transactions. I will come to know whether I am into profit or I am into loss. If I am not able to say manufacture, sell my chair more than 100 rupees, it will be loss too, right? And cost accounting, what it will do, help me. Cost accounting will let me know what is the cost of a single chair. Now how you will ascertain the cost of single chair? Like I'll just add all the raw material, like whatever the price of wood is gone, whatever the price of the labor, like I have to pay. If I'm just paying all the interest and all that, that also I'll just add up also, and then I'll just determine, then I'll just add up everything. Denominator, I'll just put whatever the, how many chairs I manufacture. That is the way I'll just get the price of a single chair. Okay, now this will help me in controlling the cost. Now this will, how it will help me in controlling the cost, because now I know, like this is maximum I can I cannot make, I cannot sell my chair say more than 125. So if I will exceed that, it is going to be like my loss. So I have to ensure that I have to just restrict my cost to that level. Okay, and now what is management accounting? See, once we have just used the financial and cost accounting, then only we can just this pass the then we can just do the management accounting. Now what it will do, it is, now so far you would have seen I have only recorded the monetary transactions, only financial. Here we'll be having non-financial data also, and quantitative data I have recorded. Quantitative is like measurable, where we recorded that. In here we have to record even qualitative data also, right? Like suppose if you mention, I told that we should not, in financial accounting we should not be like putting like appointment or modification of policies and all that. But here we have to mention that suppose if a very strong employee is leaving our company, okay, or anything like any fire and all that which will happen at R&D center, okay, so because these are going to be very great loss. Okay, so that information we have to provide, the management will see this. Okay, and then it will make the appropriate decisions based on that, right? Now I've given you again this with an example. what will happen, like say that I'm doing the chair business, and now my profit where I have sold it, sale minus cost is like I have earned 5,000 rupees. Okay, next year I am thinking that I'll be again producing, says like 150 chairs I'll be producing it. Okay, so I will require a machinery, okay, which will be of 10,000. So I have to see like how I should be getting it financing. Then I have to see like how much material I require, how much material and labor I'll be requiring. So I have to provide that also, cost that also I have to provide. And say that out of that only one third, that is 150 chairs I am making, I'm only able to sell 50 chairs for cash. The balance 100 chairs I'll be making, selling it for credit. So now I have to see the cash inflow statement, which management accounting only can provide you, the cash flow statements. Okay, so and with here I have done the budgeting also. Okay, so this management accounting will only provide me the budgeting, financing, and sale forecast. Okay, so this is the this, so all this data, if you see that, this will be used by management accounting. And then how they arrive at the cash, net cash, that is, see, I am getting 125 into 50, that is 6,250 I'll be getting it. But my requirement of cash for next year could be 10,000 rupees I require for machine, and 15,000 rupees, that is 100 rupees, I'm having the cost per chair, and 150 chairs I'm making. So 15,000 rupees I'll be requiring for manufacturing of my chairs. So 25,000 rupees I'll require total cost. Okay, which will be outflow for me. Okay, but I'll be getting 6,250 by selling it. So my net cash which I'll be requiring is 18,050. So this and all that, if you see that, this and all, like, budgeting, like, and sale forecast, like how much I'll be able to sell, all that will be coming in management accounting only. This is very critical, and this will be on, with that only we can make a decision also, we can make, they can also plan also. So this is very important. So that's it, friends. We'll do much more good, practical cases, scenarios, and all that. Little bit, this is, I can completely understand that this is little bit going to be, it's a new thing for you. So you will just see that, a lot of things, it was difficult to start with that, but I'll tell you that this will be very easy. I will try my best to provide you much more examples. And going forward, this is like starting sessions, we'll be having the theoretical thing more, but going forward, once we'll have the practical sessions, you are guys will definitely be enjoying this. I can 100% fully confident on that. Okay, so every one more thing, like every 15 days I'll be just putting my some videos and all that. So please do watch, and please, whatever suggestions are there, surely there will be a lot of improvements from my side, my end also. So I will do from my side improvements, but please provide your comments also, and subscribe the channel, and see you later. Yeah. Good night. Thank you.